The US SEC's approval of Ethereum ETFs is shaking up global markets. Hong Kong opens doors for ETFs, fueling a competitive crypto landscape. South Korea, a major crypto hub, faces mounting pressure to approve crypto ETFs. Local regulators like FSC and FSS are hesitant, fearing disruption to their financial system. Critics argue Korea's outdated regulations could drive investors to US markets, weakening Korea's financial standing. Calls for reform are growing louder, urging alignment with global trends to foster innovation and capital inflow. Stay tuned for more updates on this unfolding financial drama. Don't forget to subscribe, like, and share, and let's start. So here we are starting off with, there is a shit ton of Bitcoin liquidity sitting above all-time highs, only a matter of time until it gets grabbed. Central Bank of Mexico got the Bitcoin treatment, and here we could see fix the money of the world, and the Bitcoin and Earth is right there. So, liquidation alert, $1 billion worth of shorts will get liquidated if Bitcoin breaks the previous all-time high of $74,000. All eyes on a short squeeze. This is the best explanation I've heard on how we ended up with a Bitcoin and now more recently Ethereum ETF. And if you can watch it, go on Twitter, the Bitcoin Therapist, you can check it out, and it is 100% exactly. I just can't show it on my channel because of the restrictions. So basically, if you want to watch, go on Twitter. The oldest known Bitcoin price chart is in existence is 3 cents, exactly 14 years ago. So the 1,000 Bitcoin was traded that day for $3 only. Bitcoin has perfectly retested the upward channel like on daily chart. By measuring the target from this descending channel breakout, Bitcoin can reach the $76,000 way soon. Unpopular opinion, if Bitcoin breaches $74,000 and goes parabolic this summer, the bull market will likely not last longer than Q4 2024. Korean regulators under pressure as US and Hong Kong embrace Ethereum ETFs. So SEC's sudden U-turn towards Ethereum ETFs paved the way for other assets to compete in the market concerning the regulatory stance. The market started buzzing when Hong Kong opened the doors for ETFs to stay alive in a financial gambit. South Korea, one of the hot crypto spots, also deals with the dilemma of not approving ETFs. According to local news, Korean regulators face increasing pressure to approve cryptocurrency ETFs after the US SEC approves the spot for Ethereum ETFs. The SEC's decision will influence Seoul's financial regulators to reconsider their stance to digital assets. Meanwhile, the Financial Service Commission and Financial Supervisory Service are reluctant to allow crypto assets trading on the regular securities market. Contrasting approaches. Unlike the US, which approved Bitcoin ETFs in January 2024 and Ethereum ETFs in May 2024, Korean regulators have hesitated to include digital assets in traditional financial systems. The FSC insists that ETFs follow the Capital Market Act, restricting them to conventional assets, as they fear this will disrupt their financial system. Calls for revision. Critics argue that Korea's regulations are outdated and need to be updated to reflect the growing importance of digital assets in modern finance. Xangle, a leading digital currency data provider in Seoul, has spoken out against the ban on digital assets in traditional securities markets and advocates for regulatory reforms to match global trends. With the SEC's approval, Ethereum ETFs are widely accepted, and not only that, but Hong Kong's acceptance has also increased its adoption globally, as this creates global pressure on Korean regulators to reconsider their stance on digital assets. Jun Il-jun, head of the Korean Stockholders Alliance, stresses the need to follow the US example in approving Bitcoin and Ethereum ETFs. Failure to do so may lead investors to move their funds to US markets, potentially weakening Korea's position in a global financial market. Moreover, if Korea continues to restrict crypto, it will cause the local investors to drift to the US market, as negatively impacting the country's financial health, as they need a balanced approach to foster innovation and bring capital inflow to the system. Crypto adoption in the United States, battle figures between the Fed and Coinbase. So Fed claims that Americans are shunning cryptos, questioning Coinbase's figures, and in January, the crypto exchange asserted that 52 million Americans own crypto assets, who to believe the Fed's reserve are Coinbase's unbridled enthusiasm. Cryptocurrencies a fleeting affair for Americans. Is cryptomania losing steam across the Atlantic, fearing a repeat of the FTX scenario? That is at least what the latest Fed survey on the economy and household decision-making suggests, published on May 21st. A scathing survey reveals that only 7% of American adults use cryptocurrencies in the 12 months preceding October of last year, a plummeting figure compared to 12% in 2021 and 10% in 2022. So here we could basically see it on this screenshot. Table 21, cryptocurrency use. Type of use: spot cryptocurrency or held as an investment. 2021 11, 2022 8, 2023 7. Use cryptocurrency to buy something or make a payment. 2021 2, 2022 2, and 2023 is 1. Use cryptocurrency to send money to friends or family. 21 1, 22 2, and 23 1. Any use of cryptocurrency. 21 12, 22 10, and 23 is 7. So in this changing landscape, crypto adventures are rare. Only 1% of adults still dare to use cryptos for payments or money transfers, as a percentage halved compared to the previous year. Among these daring individuals, nearly 30% do so basic as their counterpart prefers this method, while lack of trust in banks is the least cited reason. The wealthy, however, seem to appreciate this digital currency, as those earning more than $100,000 per year are the most likely to invest in Bitcoin and the like. The millennials, 30-44 years, lead the pack, closely followed by Generation Z as 18 to 29 years. Notably, men are 3 times more likely to dive into the crypto world than women. Ethnic disparities are also marked. Black and Hispanic adults favor financial transactions in crypto, as while Asians prefer cryptocurrencies as investments. White adults, on the other hand, seem the least interested in this new digital economy, as this survey conducted in October 2023 among 11,488 adults and weighted to represent the 258 million American adults, paints a nuanced picture of the enthusiasm for cryptocurrencies. The Fed's and Coinbase's figures a crypto gap. So the Fed's figures are far from resembling those of Coinbase in its 2023 cryptocurrency study. Indeed, Coinbase painted a much rosier picture. Nearly 1 in 5 Americans would own crypto, or 52 million people. Coinbase, in its exuberant enthusiasm, claimed that 87% of Americans want a reform of the financial system, finding it unfair and biased in favor of the powerful. And in echo, 63% of cryptocurrency owners believe that blockchain technology can democratize the economy. But the Fed on its side highlights that only 1% use cryptocurrencies for transactions, primarily because their recipients prefer them. According to Coinbase, the younger generations are the most fervent crypto enthusiasts. 72% of 18 to 34 years olds believe that digital assets represent the future of finance. Coinbase advocates for clear legislation to govern crypto, emphasizing that 87% of Fortune 500 leaders consider clear rules essential to maintaining American leadership. Conversely, the Fed remains discreet on this subject, merely noting a decrease in crypto usage. So that's kind of all the information we got for today's video. Don't forget to subscribe, like, and share. See you in the next one, and peace.